Hello, everyone, and especially investors. So, as promised, I will walk you through from one scenario so you can get some understanding about investment in real estate. So, this example is specifically from US, but that's equally applicable to Dubai market because Dubai market data is a little bit hard to get. That's why I cannot prepare the example from Dubai market data, but I will show you the US market data and the same. The only difference is the price is going to be in US dollars as compared to dirhams, AED. But other than that, it's almost the same thing. And there is just, I'm more familiar with the tools in America as compared to the tools here, even though I've been in a couple of months, but there is not much tools available in this UAE market about calculation. So I will walk you through one example and then you can see what I mean. I want to create a visual example for you. So you guys, because I'm a visual learner, I like to see numbers, and we can talk all day long, but if you can see through something, then it's much easier to relate to it. So let me show you what I mean. And first of all, I'm going to share Zillow. Zillow is an American website which you can check in terms of the value of the property and everything. And let's take this example. So if you look at this example, and so this is, I randomly picked something in a Flushing, which is a New York, Queens area. And if you look at this in 2090, in 98, this home was sold for $240,000. And then 6 years later, this home was sold for $440,000. And this is not even the peak of 2008. This is 2004. And you can see the price almost double. Like if it would have been 480, and that would give like almost 100%. But you can see here 83% gain in less than a 6 month, right? And then if you look at the current price of Zillow estimated price for now, this home worth about 1 million US dollar. And if you look at from this price, about 24 years, I just wanted to make 24 years, and that's why I picked this example. So if you look at this 24 years, this was 240,000 US dollar home. Right now it's selling for 1 million US dollar. And you can see that this has been 4x, okay, so far, right? So it went to almost 400% increase. And that's something I wanted to show you. Like real estate is, some people think that, okay, real estate is very slow cooking pot, which takes forever to grow or forever to make money. But that's not the case, okay? Now it comes to one thing, like a lot of people have a misunderstanding about real estate investment because of two reasons. People don't understand inflation, how inflation works and what impact it has on the currency value. So everybody who can living in Pakistan or India or other part of the world, maybe Turkey, they can see their currency is devaluing against US dollar. And that's why their currency is becoming worthless. But same is true with US dollar. US dollar is also becoming devalued. It is losing its value slowly but surely. And that's the example. Very rare, the prices get appreciated. But most often, it's the value of the currency actually goes down. And I'll give you an example. Let's say if you have a $100 bill. And if you divide into 5 bills, $20 each, and now you have worth equal to, now you have 5 bills. It doesn't mean you have more worth. Your worth is still the same, right? It's just the currency divided into multiple pieces. It's the same type of a concept. When there is inflation, actually the value of the currency goes down. And that's why you need a more bills, a more currency to buy the same product. Now, if you want to look at this home worth is probably the same. The number of effort it takes to buy this home is the same, like in human hours or whatever you want to call them. The effort is the same, the material is the same, but the problem is the dollar has become so devalued. Now you need a 1 million US dollar to buy just a simple small home. Okay, and that's what's happening everywhere in the world. That's why when you're buying a home, you cannot ignore um, inflation. That's why assets are the very good products to buy against inflation. That's why you need to buy real estate to counter the inflation, because that's the only instrument. Either you can have a gold, which is non-producing asset, or you can have real estate, or you can have stock. But stock, the only challenge is market normally crash, and you have this is non-tangible, and many people cannot have access to it. So you are better off buying real estate. Real estate is one of the safest asset class and give you the best outcome in terms of. Now let me walk you through from the whole scenario how it can work. If you look at, if you buy a home which is about 500,000, okay, and $1 million, sorry, if you buy a $1 million home and you pay 500,000 US dollars, and your loan starts with the 500,000. At the time, if you are borrowing at 3.5, which is UAE residence rate, if you are a resident in a, so the only thing, like I'm saying, this is describing in a US dollar, but is same thing is applicable to AED, okay, and dirham, UAE dirham. In over 25 years, if you take the loan for 25 years, okay, you will have to pay 250,000 dirham extra, around 935, 6 something. So the total cost of the loan will be around 750,000. So you pay 500,000 US dollars and you have to pay around 750,000 US dollars, right? Now, a lot of people get stuck that why should I pay 250,000 US dollar more? It's a lot of money. Is a dirham, same thing, right? Currency doesn't matter which currency you're using, euro, pound, dirham, whatever the currency is. And here is the example normally what you pay. So first many years, around 11 years, that's why it's very important. The first 5 years, you are paying a lot in terms of the interest, the capital. Your principal is not going down. And then the around 63rd month or 62nd month, depending on how much you're paying, you start to paying more towards your principal, and the money you borrowed, actually you start paying more, and see the how it's a less and less is money is going towards your interest payment. And I'm going to go a little bit down so you can see it. So here you can see that it's going against your principal, and you are only paying very little interest. And I will show you what you can do to tackle that one as well. Now let's look back, and there is a better example also. You see this, when you start paying on a mortgage, very first 5 years, you are paying, you can look at this different colors, right? At this point, somewhere around 60th month or 65th month, you start to pay more money towards your principal, and you start paying less and less money towards your interest. And that's why you, in the end, you become the owner, okay? I can walk you through more on this one, but you need to bear with me for on this one. So normally you are paying around 250,000. If you are borrowing 500,000, half a million dirham or dollar, you are going to pay around 3.5% interest. You are going to pay about 250,000 more. Now, if you, and we will come back to this example, okay? Let's look at the inflation. One of the most misleading indicator ever been created is this inflation. Everybody thinks, okay, because government is saying inflation rate is around 2%, 2.5%, or 3%, or 3.5%, the inflation is around that percent. But if you look at over the period of time, this spikes, every once in a while, there is a huge spike in terms of inflation. It's sustained for a very long period of time, around 3, 4, 5 years. And if you look at the overall average, sometime, and they keep changing what inflation mean is. Like, look at there was a 13% inflation in 1979. That's why there was a 1980 housing crisis, right? There was a bubble burst in 1980. If you look at this right now, even though because they changed the definition of what inflation is. If you look at this example at the, This home was sold in 98, around 24 years. I wanted to pick the one example which is 25 years, right? So this, from this price to this million, right? Look at the price, how much it increased in terms of buying the asset. And yet, if you look at here, visualizing, you will not see a huge inflation in this period, except because that's where it started somewhere, right? Last 20 years. And yet, these prices has become, you can see it, how high it is. Now, in my opinion, and many people, experts' opinion, average inflation is around 7%, 7.5% all the time. Okay, if you take 100-year over, any prices, especially real estate matters, is about around 7.5%, 7%. Now, what you can do in terms of making, so here it is. You are buying a home which is $1 million dirham or dollar. You are paying 50% down payment, okay? And then you are borrowing about 50% against the mortgage from the bank. Your interest will be this much, around $250,000, okay? And you will pay $1.2 million, 1.2 million, 5. You will be paying this amount of money to buy that asset. If history repeats itself, at the time in 2047, the worth of that home will be around 3 million, okay? Around 3 million. You will end up making around 1.7 or 1.8 million more, whether it's dirham or US dollar, depending on where you're buying the property, whatever in this case, at the end of the day, your property will be far more expensive. And I'm sure it will be more than this number, okay? But even if it's given the history where it is, and I am just including 4% inflation at the rate of, this property, if you buy which property you buy today at this price, if over the period of time, around 500% inflation, you will end up selling this property around 3.5 or 3.1 million, depending as who knows where the situation will be. But given the very conservative numbers, this will be somewhere, rough number will be around this number. Okay, now coming back, what you can do to reduce if you want to pay less interest, right? So if you start paying a little bit like a $500 or dirham extra every month, you can reduce your interest from 100 or 250 to 180,000. Okay, and your total cost of the amount of money you borrowed and what you paid back will be around 65,000. Is it worth it? There is a lot of strategies what you can do to reduce the amount of interest you are paying, or buying a new property. It's not advisable to make. You can buy another unit and you can have a more cash rental income, because let me go back here. US is capital appreciation market. You get only 1% or 2% rental yield, depending on where you are buying. You are not going to get a high rental yield. So most of the money comes in terms of the capital appreciation. Your worth of the home goes high, but you get a very little rent. Dubai is a high rental yield place. You can get 7%, you can get even 13, 11%, 12, 13, depending where you're buying. So two different strategies to work with. But both places, the mortgage is the same. If you're buying if you're a local resident, you are paying around 3.5% interest. And actually, because the inflation is much higher, 7% or 7.5%, you are actually saving every month 4%, right? Every year, you are saving almost 4%. It increasing your capital, the value of your property, about 4%. So I can go on and on. I can give you more example, but this is a very clear example. And you can go to this website, Zillow, okay? And if you go and you can check the price history, you can check price history of any property in America, and you can see how much it was in 97 or 98, depending on if you want a 25 years, because I'm giving you an example in this one in 25 years, right? So in 25 years, what will happen? Your property will be 3 to 4 or 5x, okay? Depending on, And you can pay a little bit more money every month to reduce the burden of paying the interest rate. You can buy something. Real estate is one of the best asset class to buy, especially when there is high inflation. Okay, inflation is always there. It's never, ever, ever that there was no inflation. It's just inflation goes down and inflation goes up. It's just sometimes it's too much, it's dangerously too high, and sometimes it's less and it's not reason, or like most people are okay with it. So that's why the property market is always making money. I mean, if you look at between the 2000, even though there was 2000 crash, right? And the 2004 was not even the peak of the market. 2008 was the peak of the market. And I'm sure at that time, if this person tried to sell this home, he could have sold for 600, 700,000. You can find more examples. We can check any other example. I'm going to try. There is, let's see, this unit, right? And I'm picking randomly. I have no idea whether it was sold. And so this was built in 2071. Let's see what is the value at the time, if it was sold ever. Their history. So this history is not visible. Let me reduce a little bit. I made it. So let's pick this condominium for sale. Condominium normally don't get appreciated that much, so we will pick the homes. We can see what it look like. So that's how you can do the research on any property. Okay, so look at this. Okay, this property was 650,000 at one point in 2012, and then it went to 1.2 million in 2018, right? Then it dropped for whatever reason. It sold for 800K, right? Now, see what happens between this price. Last year, somebody at the Corona time, COVID time, somebody sold it for 800,000. Even though the worth of the property just before the market, something happened, it was about 1.2 or 1.4 million. You can look at the price here, okay? Estimated sales range. And here, this, okay, the price of the, and then what happened? Now the price is going up. So this is the place you need to buy, right? This is the, when people are in the crisis, that's the place where you should buy. And because in America, this data is available, that's what we are trying to do. This is what Fourier is trying to do. We are trying to show where the property could be and project in the future and past and all those kind of things. So we are working on a huge data stack. Eventually, we will have this data for us. We are not going to share to the public, but eventually we will share at some point. I don't know. We didn't decide yet at what point we will share this data to the public, what is the worth of the property. Now, this is the point where you want to buy. Now, the person who bought this property for 800, and this was the actual sale, because you can see the dollar sold for 800,000, right? And look at this property is back to normal price. That's what I call it, distress assets. So at the time when people need money, they will sell the property, just like that actress who was willing to sell $7.5 million dirham apartment for 4.5, and she ended up selling for 4.3 million. Exactly the same. Look at this person, half the price, right? About 1.2 million was the worth of the property, 1.3 at one point even, and that person sold for 800,000 because that person might not be able to afford to pay the rent or I mean the mortgage, and he has to try themselves. They have to save themselves, right? And they have to sell this. Anyway, this is just a randomly I picked something and that turned out to be the example. I can show you hundreds of these examples, okay? Pick single family homes so you can have a better understanding in terms of, you can keep going and you can do your research. There was a one viewer other day asking what should be the value, right? And look at this, okay? So the property value was here. You can also see more a little bit, you know, the taxes and other areas, you know. So look at this property. It started with the 800,000. It went all the way to, at the peak of the market, about 1.9. It was sold for 1 million. Then it went back up to around 1.5 million. And right now, this property is available for 1 million. Okay. Now you decide whether it's worth it. The whole idea is buy properties when they are historically low. So this was a historically low price, right? This was a historically low price. This was a historically low price. Don't buy when the properties are here, right? In June 2020, the property was at the peak. Now the property is one more time back to the historical low level, right? Around million. Can it sold? I think somebody can buy it maybe around 900,000, 950,000, depending how much it needs, or maybe even it gets softer and you can buy like somewhere maybe 850,000 or 900,000, depending, right? So that's what it takes. You need to buy when the bottom side of the graph, not on the top side. But majority of people try to buy where on the top side, right? In the market. We didn't see yet, but hopefully we will pick some example and because I'm picking randomly all these examples, I have no idea whether what is going to come. The only reason I picked New York, because New York has, like this home was built in 1960, okay? So we have a huge data set, we can look at it. So let's go. So this price, look at, this is the listing price. It was listed 1.6, then it went 3% down, now back. So the market goes up and down. Sometimes people reduce the price, sometimes they come back. Now we have to look at the last time. So this home has not been sold in last 10 years, I think. There is no price history available on this home. Anyway, let's pick something else. Maybe this is not single family homes, so this is a new building, seems like. Let's pick this one. Okay. So this is the price change. They are trying to sell from 3 months already, right? The average time to sell a property is 107 days anywhere. That's why what Fori is doing, instant buy, is very important. Like we can instantly buy the property. And look at this person. He's been waiting from some time, reducing the price, up and down and trying to sell. Fori, that's why we created this company, that if somebody is willing to sell for lower price, slightly lower, of course, we have to pay taxes and we have to cover those things. Let's check if this property has been sold previously. Unfortunately, we don't have any history. Let's try this. Okay, so this home was around 727,000, right? And in 2014, just 8 years ago, okay? And look at the peak, it was 1.8 million, right? The person who bought this home could have sold at that time. So that's why you need, if you want to make money, you need to get in at the time when the market is really low, and you need to get out when the market is extremely high. And that's how you make money. That's how you capitalize on the inefficiency of the market. Markets are never fairly priced. Markets are always either underpriced or overpriced. And that's where the opportunity of buy and sell is. Because most people sell when they need the money. They don't sell when they should be selling. They sell when they need the money because they want to hold on to everything what they want. And that's what creates the market opportunities, right? That's where the opportunities are. You need to catch those opportunities. You need to go ahead and then don't become, I don't want to say the word. I have a word for this, but let's not say. So listing has been removed. Look at, it started with a 1.8, okay? In 2016, they tried to sell it, they remove it. They try to sell it, they try to remove it. So something is happening definitely with this property. But you can look at all these properties in the area. You can find the properties which people try to sell it. There must be some problem with this one, and this property that nobody wants to buy. Whether it's not a good place, or whether the school system is not good, or some criminal record, or whatever, something must be there. Now, look at this one, right? Now, we can also look at the table view, right? What's happening in terms of, but this is just a recent history of this, what people were trying to sell. I want to see the previous history of the, let's pick this 1.3 million. This is the same one, I believe. Okay, let's search something else. Maybe we can pick California. Okay, so are any other place you can pick? You don't have to pick New York. I just picked the New York. We can pick California somewhere. Or okay, let's pick this LA. These are not high-end homes. Of course, you're not going to buy the place where it's nobody. Okay, so this is a very good city to compare. This is like a DHA, Lahore, right? Or Islamabad, Garden City. So let's look at this home. This is a high-end homes. You know, this is a beautiful area. This is one of the best places to live in New York City. So see, in 2014, this home was around 550,000. Right now, this home is about 1 million. Okay. So in 8 years, this price has been double. Like if somebody would have bought, and I'm sure at that time also people said, oh, okay, look at this, when the price was around here, right? Again, after going 600, 700,000, it came back and nobody bought it here either, right? But look at the price where it is priced. And price will come down. Price always come down and goes up. Is the short period. That's the only way the things get sold or bought, because people believe that they can make a lot of money, they sell it. The people who believe that it's cheap, they buy it. Or people who are in emergency, they have to sell. So they sell it on the cheaper price, even though they're losing money. That's the way the market works. So you have to buy when the price is on the bottom side, okay, not on the top side. I will not buy here. I would have bought here in 2018, 19, and the problem is when the things are selling on the cheaper price. Let's take a snapshot. Last time so let's take the snapshot of this. So when prices are here in this range, right, on the bottom side, people believe it will go further down. And that's the one reason people don't buy. They want to buy even more lower because they are looking somewhere here, right? When it was 2004 or 2000 something, they are thinking that, okay, the prices will drop to around maybe 400,000 because at that time it used to be. Now, can you buy here at this point and the price can go further down, right? Let me make the red pen. So you bought it here and you thought it's a good price and market went down. And now you are worried that you bought it at a very high price, right? But if you hold it enough, like 5-year period, that's why I tell you, don't do investment for less than a 5-year, right? You always can sell it higher price. You will always recover more than what you paid. It will never the price will go down unless you bought it here, right? And even if you bought the peak of the last time, you still have a better value right now. Prices always goes up, especially for asset class. Okay, producing asset class. Gold is not a producing asset class. Don't confuse gold with real estate. Real estate have a utility. People live in homes, and especially this is non-fungible, right? Nowadays it's NFTs because of NFTs. This is a non-fungible asset. Nobody can replicate this land. This is the only land on this planet. Of course, there is more land, but this, because it has a sewerage system, it has a school, it has a road. If somebody try to make exactly the same, the cost of doing that will be huge. And that's why the property price will go up, right? Because if you try to make a barrier town or DHA or something else, London, it will cost a lot of money to bring that utility, the bus service, the restaurants, and everything. That's why there is a price for the property. It's a unique piece of land on this planet, and nobody can replicate. That's why these properties worth something, and that's why real estate worth something. It cannot go to zero. It can maybe drop some money. I mean, look at the here to here. It can go down, but it will never go to zero. Maximum 35% reduction. Only if you bought it like here. If you buy something very high, yes, there is a chance it can drop, okay? But it will never go below this intrinsic value, okay? Right now, its intrinsic value around 600,000. it will never go back to below the 600,000. It will be always, even if it come, it will stay here somewhere, but it will recover. Okay. And that's what I tell you guys. When you are buying, you need to understand what you're doing. You need to understand, especially this equation. Even if you are paying a little bit money to the bank to borrow, because of the inflation, you will get a much higher price at some point in life, as long as you are not forced to sell. So don't buy an asset which you've been forced to sell. Always buy the asset which you can hold for a very long period of time. That's why I suggest buying with 50%. People will tell you don't buy with 50%, only buy with 3% in America. There is so many con artists to preaching these kind of things, and those are the guys who sell a lot of courses how to buy property with 3% down. You can do property buy in Dubai for 20%, but that's not a wise thing to do. Have some equity in the market, have some funds on the side, that if there is some downturn, you can pay the mortgage, like what happened in the COVID season last year. If people leave, there's something crisis, property always come back. You just have to have some room to sustain some period of time. Okay. Now, that's all to give you this example, but I will take one or two questions and we'll close this conversation. So I'm going to turn it off this, and now I will try to read your questions. So the question is, what factors, depending, there are always some factors. It could be known factors, or sometimes it could be unknown factors. Here is the thing. When the money supply goes up in the market, like America printed a lot of money in the last 2 years, normally inflation goes up. When inflation goes up, the prices goes up, right? One way or another. If people have more money to pay, or the income grown, like let's see, there is a one family who is only one person earns, and there is a family next to that, there is 2 people are earning, or 3 people are earning. Now that person, home X, has more money than the home Y. The home X can offer more money. Now, or there is a corruption money. Some countries, the prices goes up for real estate because there is a corruption money, and you can relate to that country. There is sometimes money where is a lot of money get injected. People are leaving. Like right now, one country in the world, I don't want to name it. That's where the prices keep floating. So depending on the situation, country to country, the factor which makes the prices go up could be different. The prices which goes down is always same, almost. There is a lack of demand. People don't have money. There is a lack of business. Lack of availability of the funds, which is the biggest reason, right? That's what deflates the market. Yes, Khizar, I picked this one for you especially because you were interested to. So you can do on Zillow, you can do, but the most important thing is to understand how interest rate works, how inflation works, and how to subtract inflation, interest out of inflation. That's single most important thing you need to. I don't know when you join, but I'm not going to delete this episode, so it will be available. Watch it and start using YouTube so we can all have a same communication. I'm gonna eliminate Facebook, and I'm always going to be on YouTube. It's much easier to search the videos. There is many ways to buy properties, but I don't want to give you wrong impression. Work hard, acquire some skill, bring some money in, save some money, start from a very small property, do something, maybe buy when sort of like I told you, like a committee type of a concept where developer giving you installment offer post handover, like in Dubai, they will give you the access to your apartment, but you have to pay in next 3 to 5 years or 6 years, or try to do something like that and have some assets, and then you go bigger and you buy more or something like that. Thank you. So It's a good question. Should you keep your assets? Now, you can do two things. I don't know how much money you have, but here is the thing. If you have a sizable money, divide it into two. Buy half, use half the money to buy something which you think is under a value right now. There is always people selling properties in distressed asset on a discounted price. So if distressed is hard to understand, I can use discounted value, or people who are in trouble, they want to sell it. Buy those assets now, because your money is becoming devalued all the time. You are 7%. So if you have 1 million, if the inflation is 13% or 10%, just to keep the number round number, it's not what government is saying, around 8.5%, it means you're going to lose the worth of 85,000 at the end of the year, right? Out of a million, you're going to lose 85,000. It's becoming less worth. So why do you want to make it worthless? It's like something, it's like chicken who cooked and it's going to get spoiled, but you are waiting for it spoiled so you can eat. So it's a very hard concept to understand, but always buy the asset when you have cash. Keep some cash for rainy days. Keep some cash to buy the assets one. But opportunities are always available in the market. Always. Don't wait for. You haven't seen that example in one of the example. Somebody sold in 2018. Way before. At that time, somebody knew that this person cannot pay the mortgage. Somehow they figured out. They talked to this person. They bought it. So if you are always looking for the distressed asset, you will find it. You are welcome. So I'm sharing all this knowledge so you guys can plan out. You can, and of course, it's all free knowledge. It's all available. All these sites are free. You just need to learn how to do calculation. You just need to understand how capital market works. You need to understand how banking, financial sector work, right? You need to understand the cycles. That's your, you can learn in 6 months time, 3 months time, depending on how much education you have and what sort of knowledge you have. Don't waste your money. Don't buy any quick and get rich quick courses. You can read books. You can read on YouTube free of cost. It costs you nothing. Just learn. Of course, as important as buying, selling is also very important. When you know market is, there is always a market exuberance, right? There is always market is hyped, like last year stock market. And I tweeted multiple times that the US market, equity market is extremely high. It's going to crash. You can check the my Twitter account. You can check on Facebook. I posted again. When rupee was going to drop, I put more. As long as you are in the market, you are close to this. Just like a movies that get released, you get to know like, okay, which movie is coming. Just like songs, which song is on top of the chart and which is dropping and who is becoming a new singer. The same thing. If you create a love for financial markets, if you really love what you're doing, if you get into this real estate and everything, eventually you will develop that sense. You will know when to sell, when to buy. You will have a data. Now there is so much data available. If it's the top 10% time of the top, sell. When it's the top 5% or the bottom, buy. So it's not a rocket science. You can make a good decision eventually, but it takes a little bit of time. I did not study Romanian's market. I will look into it and I will give you some idea. If you think that this is a good, you need to look at a historical price point. You need to look at the future. If the population is growing, the prices will grow. If the population is shrinking or at the same level, then most likely prices will not go up. Those countries where population is growing exponentially, the market will grow, the prices will go up because there will be more demand for homes, right? There will be more need for the homes. So you need to look at a couple of factors. Just because something is paperwork is less, it doesn't mean it's more valuable. Just because it's easier to get a mortgage, it doesn't mean that's the right place to buy. There are multiple factors. You just don't look for ease of doing something. Buying a property, ease of managing, of course, you want to make sure that your assets are safe. That's single most important thing. Europe, everywhere assets are safe. Western world, assets are safe. You don't lose assets. As long as you do the planning, you don't lose assets. I don't know about Romania. In anything, practice is everything. Learning is everything. Knowledge is everything. Timing is everything. Everything is everything. It's not a one factor which makes you successful. It's a lot of factors makes you successful or loser. But you can work on that, right? You can add one specialty at a time, one thing at a time. Eventually, you're going to make some mistakes along the way, but forgive yourself. You don't have to buy on the bottom, rock bottom. You don't have to sell at the rock, top of the peak. It's okay if you sold a little bit early. It's okay if you bought a little bit early. But just have a patience, have allocation. Capital allocation is the single most rewarding skill you can learn in life, and that will give you hundreds of times more than your labor can produce. And the problem is a lot of people are so scared to spend money because they have an emotional attachment with the money. They don't use money as a utility. They use money as life, and that's the problem. So two different markets. US is mostly capital appreciation. You're going to see the prices of the homes goes up. Rental yield is not going to be there. But I prefer rental yield. UAE is a rental yield market. You're not going to have appreciation. There are some areas in Dubai where the appreciation, capital appreciation happened exponentially in last 6-7 years. But capital appreciation is only for very selective areas. Most what I like about Dubai is you have a high rental yield. You get this cash flow. Learn how cash flow works. Cash flow is one of the greatest magic in the world. If you understand how cash flow works, you can make a lot of money. Okay, so focus on generating cash flow, especially when you are not a huge investor. You don't have a huge funds. When you are a small investor, you want to focus on a cash flow. And I will do one session on cash flow so I can give you the ideas more. So future of Dubai is bright as of now. Things could change tomorrow. Nobody knows. So far, I think they have a good governance. Their royal families are very much interested to keep this place a beautiful place, a workable place. So you have much better chance to have a good life in Dubai in next 20 to 30 years. Projections are there. Anything could go wrong in life, like tsunami, natural disaster, which could create difficulties. Anything, wars. Nobody can predict black swan events like COVID happened. Nobody can. But in terms of current situation, if you look at their government, if you look at their infrastructure, if you look at their progress, I think it's a great place. And next 20 years probably will be better than the last 20 years. Because now people start to realizing that Dubai is a place to be. There is a lot of foreigners coming in. There is an instability in the market around neighboring countries. Those people come here for safety. It's a very safe country. So all the indicators, the checklist, except one or two things, which is cost of living is high. There are less friendly business environment. There are a couple of challenges. There, no place in the world is the heaven. Okay, America has challenges. Every other country has challenges. Dubai has its own challenges. But long run, I think it's a good place to live. Every country will have recession. Every country recessions are cycles which is far bigger than the one country. So it's not like one country will have a recession. Multiple countries will have a recession. It's not about that. You need to see how the economy is managed, how the governance is done, the safety mechanism in that country. Those are the things you should be focusing. Recession will be there, and at that time, all other countries will also have some sort of a recession, or maybe a little better or worse, but recession will be across the globe, okay? If that kind of severe recession happens. Definitely, we will do on cash flow. I will show you cash flow, how cash flow can play an important role in your investing decisions. Anyway, last question. If there is any, I will go back and try to look at if there was any question which I missed, because during that time I was completely focused on delivering the knowledge. Okay. I guess there is no question on the top. So if there is any question, I will answer the last question. Thank you for joining. I know it's a little bit late. And now these videos will not be deleted, so you can review them. But eventually we'll delete from Facebook. So start using YouTube and start creating community there, because I think it's a much better platform in terms of going back, and we can create some sort of those series of videos in a one list where you can see much better. It's more searchable. So let's focus building community on YouTube. Yes, playlist. Thank you. Sometimes I lose, out of my thought processes. Sometimes it's hard. I'm not very good at doing this live, okay? I'm still learning. I can record and send you this, but I think live is much more interactive and, it's much more fun. And we will do more live. I think I like more live than doing this, what normally people do, make the video and just upload. 3 investment in your opinion in Dubai. Buy distressed assets in Marina, downtown, Business Bay. I think these are the best places. Of course, Jumeirah and Palm Jumeirah and other places are also very good. But properties are so expensive. So I'm talking in terms of the audience capability basis, okay? So Jumeirah Palm Jumeirah is very expensive. It's not for entry-level investors. Marina, also Dubai Marina is also a little high-end, but still you can buy something. Downtown Dubai, there are certain properties, if people know. And then also Business Bay. There are many areas in Business Bay where you can buy, I think. There are townhouses, villas. If you buy those, probably it's going to be worth. Capital appreciation will come, but it depends again on the funds, right? So if there is a lot of funds, buy villas. If you have less funds, buy real estate in terms of apartments. Always buy a studio apartment or 1-bedroom apartment. It's much easier to sell. Even if you have money for buying for 2-bedroom, don't buy a 2-bedroom. It takes a little bit longer to sell. 3-bedroom, no, never buy 3-bedroom for investment. Just studio, 1-bedroom is good. For the audience, I'm talking about the one. Of course, if you have plenty of money, then it's a different story. Okay, my email is on Facebook, but please send me only meaningful question. If you want to send me some meaningful question, I'm always there. I will answer. You can also tweet me in any place. You can send me Instagram, Facebook, LinkedIn, anywhere you want to send me a message, but please make sure it's a worthy question. New investor, depending again, it's very hard to give you definitive answer. Start from anywhere, depending on your cash capital size, right? Learn how much your capacity is, and then what strategy could be the best strategy. I have no idea what is your, how much capital you have. So for each type of a capital or the amount of money, there is a different strategies. And how do you strategize? What do you want to do? Is it long-term, short-term? You want to maximize your gain? You want to have a long-term rental yield, cash flow. It's all depends. It depends on people, taste, risk tolerance, the amount of money they have availability, and then how long they can wait for fruit to flourish, right? Anyway, thank you so much for joining. Have a wonderful night, and we will do on cash flow, and I will figure out some couple of other subjects. And if you have any question, you can also post in the comments, and I will try to answer if it's a meaningful question. Good night.